We do have the Nasdaq and the Russell, Nasdaq Russell above their record closes. No intraday highs yet this morning. Let's get to Bob Pisani. Hey, Bob.
Hey, guys. Happy Thursday. And we're very close, Carl, on a new high for the S&P. So where are we here? 38.40 or so? 38.55, remember, was the old closing high on the S&P 500. That was just back January 25th. So a lot of these concerns about GameStop and systemic risks starting to fade a bit. Just take a look at these sectors here. Banks having another good time. They've been up several days in a row. Tech is up, although, of course, semiconductors are under a little bit of pressure on Qualcomm. Energy, oil essentially is at a one-year high right now. Some positive comments from some of the big oil producers there from OPEC. Industrials are up, and consumer staples down 5% so far this year. They've done nothing the entire year, very flat. The shorts, GameStop was flattish pre-open, but is essentially down again here right at the open. A lot of selling pressure right at the open. AMC also down. And the other ones expressed down a little bit, as you can see here. In terms of earnings, I like looking at what I call pandemic-influenced earnings. Allstate, did you see this net income up 52%? A sharp reduction in car wrecks. There's a lot fewer miles driven. The auto insurers have been giving some premium refunds. Maybe they should be giving more at this point. PayPal, I thought was interesting. Boy, online buying is just surging. 2021 guidance says total payment volume will be up 25%. And they're expanding the crypto offering, of course. That got a lot of attention. Grubhub, fee caps instituted in cities to help independent restaurants are hurting their profits. They said they made 52 cents, but they would have made $1.50 if it wasn't for these fee caps. And you can see that's hurting Grubhub there. Always like looking at that. As for the regulators, this Janet Yellen meeting with the regulators, very good for her to get out in front of that, but a lot of concern on Wall Street. My Trader Talk today has a story about this. Two big issues. One, SEC potentially looking at market manipulation. A lot of people I've talked to say this does not suggest a traditional pump and dump operation. This will be very difficult to prove any kind of market manipulation here. But I think FINRA, which is the organization that regulates the brokers and the broker-dealers, they had put out a statement earlier this week, and much more interesting, they're looking this year as to focus on gamification of trading. That's a very broad topic, and it includes things like suitability. That's a very loaded term. It's a legal term. It basically says you got to put your investors in investments that are suitable for them. And so you have, FINRA has specifically come out and said, we're going to be looking at apps this year that have interactive elements. We're going to be looking at apps that provide recommendations. We're going to be looking at apps that might influence customers to engage in certain types of trading. This all goes under that suitability rubric. Are you putting your clients into situations where they're engaging in trading that may not be suitable for them? You see, this is a real rabbit hole you potentially can go down to. And the question is, how aggressive do you want to be on the whole suitability question? My point is, this is a much more fertile area if you want aggressive regulation than trying to figure out whether there's market manipulation. Finally, a very famous fund is going public today, the Magellan Fund. Now, those of us who are of a certain age remember this fund very, very well. The mutual fund still existed for many years. It will continue to exist, but it is now going to trade as an exchange-traded fund. This fund was the most famous fund in the world many years ago. When I started back in 1990, it was led by legendary investor Peter Lynch from 1977 to 1990. At one point, it was the largest fund in the world. It had $100 billion in assets. Now the mutual fund is down to about $22 billion. This is a large-cap growth fund still. It was then, and Peter was, of course, famous for his stock-picking abilities. David and Carl, I'm sure you both remember Peter Lynch. And this is a real sign, again, about movement from mutual funds to ETFs, more tax efficient, easier, can trade it in the middle of the day. And that ETF revolution just keeps on keeping on.
Shepard Smith here. Thanks for watching CNBC on YouTube.